Thank you, PMS Bazaar, for organizing this event. And I was told this is kind of an event where it was oversubscribed. There were even we were getting so many requests where people wanted to come and participate. So congratulations for the successful event. And I think when we look at the journey of GIFT City, I'm sure many of you have been tracking and well connected with how the entire ecosystem is coming up, and specifically from the capital market perspective. And probably more than 200 funds which have registered. And I was very happy to see in the morning where now there is a platform where one can see the details of the funds registered. So we were till date aware about who is registered at what category, but probably we will now also know what kind of returns these funds are generating. So good to have that platform available where we can also see how the funds are performing. We have a very interesting panel here today, and I think it cannot be better than this, where regulator, the tax expert, and the one who is raising fund and investing into the companies, you can call him a fund manager as well. They are here today, and probably we will discuss and talk about the entire ecosystem around these three activities which are very key for fund management. And if we look at the for our panelists, basically the crowd present here, they are largely distributors who have been closely interacting with the investors community, and they are also closely working with the fund managers. So I think I feel they are one of the important part of the ecosystem where they're actually connecting with the two, and they are creating a bridge between the investors and the funds. We also have the fund managers here who are actually looking to create different structures, and that's where we'll also get insights in terms of what kind of funds are getting registered here, because while GIFT City is a platform where more and more innovations can happen, and that's where we will also understand from the experts here in terms of what kind of new innovations happening in the fund as an industry. That's where whenever you are interacting with your investors, you can actually highlight some of the initiatives that GIFT City has taken as a fund jurisdiction. So I'll start, and I don't think the team here needs introduction. Pradeep ji, coming from the SEBI after spending a couple of decades, and he has taken a new challenge here to create international financial ecosystem for the capital market for the country. And we have been seeing the regulatory developments coming up on a regular basis, and he's the instrumental basically in terms of bringing so many regulatory developments in the capital market ecosystem. Today I think I'm proud to say that when earlier we have been looking at what is happening in the other jurisdictions in terms of the regulatory and tax ecosystem, but I think you have turned the page and people are actually looking at what GIFT City is doing in the fund ecosystem, thanks to the regulatory enablements which have come through over a period of time. So probably I think because many of the audience today, they visited for the first time as well, and it would be good to kind of give a broader perspective about how the regulatory ecosystem is evolving in the capital market space, and specifically for the fund management ecosystem, and then I'll come to the specific questions later on. Thank you.
Thanks, Sandeep. Sandeep is one of the few faces of GIFT City whom we all know, and I'm glad to be here on a panel with the other dignified members on the dais. I'm happy to be here, and it's the very fact that we are having an event which is pretty niche, right? And earlier we used to have a funds event. Now we are starting to have a CAT 1, a CAT 2, a CAT 3, and a PMS event, and which is a growing evidence of the fact that probably we are going on the right path, and probably we are trying to, whatever we set out to create, probably we are trying to do. The IFSCA, as by now you must have understood, a lot of people know, it's largely it has been, we have been created with an objective of bringing, and IFSC also, bringing the international business to India, onshoring the offshore, as we have been saying. The second one is to be a hub for capital funds, to raise funds, because India largely is a capital deficit nation. And while we have been quite good when it comes to moving up as far as the GDP is concerned, we are expected probably in the next 3 to 5 years to probably reach number 3 as far as the economy is concerned. But we also need a lot of capital for that. And also taking into account issues such as our own ESG goals, net zero goals, I think there is a lot of money that needs to come. And for that, a lot of money has to flow from international pockets. So the GIFT City is probably a very unique experiment, and which has been going on quite well towards that. Now, the IFSCA, particularly in the capital markets ecosystem, we have tried to sort of create all the pieces together. We started with having the ecosystem of having a stock exchanges. We have 2 stock exchanges. We have our own depository. We have our own clearing corporations. We also have our own bullion exchange, right? Which means that it is already set up for trading and whatnot. Similarly, when it comes to the fund management ecosystem, initially we brought in a regulation, while of course it was really made fit for purpose. The last 3 years, there has been a lot of learning for us, and from which the fund management regulations 2025 have come out, which has been widely appreciated by the industry. So I believe we'll be able to do it. And probably, I don't know whether I can spell out the numbers now or probably a little later. Yeah, so this is evidenced by the fact that the fund, the commitments which have been sort of put forth, the corpus is almost 70 plus billion. The commitments are almost 22 plus billion, and the actual investments are half of it, almost 11 billion. So which means, and it is rising at a very fast pace. And though in numbers, when you look at them in dollars, probably they look at a 10 billion or 11 billion may not actually hit you. But when I'm going to say that the amount involved is almost 20,000 crore, 25,000 crore, which actually it is, then it actually hits you in your face as to how big it is. And probably what we are setting out to do, what we have set out to do, probably we have tried to reach where we are. But one thing which is important is that a regulator never has rest, and it should never rest, because this is particularly in this day and age, particularly with a lot of geopolitical events and other things impacting us. The IFSC needs to ensure that it is able to adapt to all these things and have a regulation which is at least largely all weather. So which is what the regulator is trying to do. Essentially, one is you need to ensure that the cost is less, there is innovation, and we are not averse to changing our position in case the situation demands.
Thank you very much, Pradeep ji. And I think the numbers speak itself. We are talking of 10-11 billion dollar of investments already made from GIFT City. And and probably this journey is only, while GIFT City's journey is a 7-10 years old, but the fund journey specifically is only 2 to 3 years old, because these regulations came up and there were certain tax related changes. So I think and the testimony which now I'll come to the 𝐻𝐸𝐺. Basically, I think he has been involved from the first FPI license in GIFT City. And he has seen how the journey has been in the fund ecosystem specifically. And many of you may be wondering in terms of what kind of regulatory structures have been created today where the funds are, investing, and why should we not set up in, say, Mauritius or Singapore, basically, when you want to raise money from overseas and invest in India. If your objective is to invest in India as well as globally, why GIFT City? And if somebody can download 𝐻𝐸𝐺's travel journey of last decade, probably in last 5 years your travel to Mauritius, Singapore would have reduced, if I'm not wrong. And because of more and more funds are now looking at India as a jurisdiction to create structures within India through GIFT City and then invest back in India. And that's where, 𝐻𝐸𝐺, if you can kind of give your perspective, because you have seen India's journey where many funds have gone abroad, set up structures. I'm sure you have advised hundreds of funds in terms of structuring in Mauritius, Singapore kind of jurisdictions. But because there was no opportunity to create a dollar fund, now India has opened it up and dollar funds are getting created in GIFT City. What's your experience in terms of now advising clients for GIFT City as a structure, and what kind of benefits that you see for setting up fund in GIFT?
Wonderful. Thank you, Sandeep bhai. Thank you. So for a moment I got scared that Sandeep bhai has got my passport copy, but I realized it is just a guess, and that guess is true. Our visits earlier to Ireland, Singapore, Mauritius have come down and have been replaced by more visits to the GIFT City. And today, unlike maybe 3 or 4 years back, where we had to actually go and sell to clients what a GIFT City is, and there used to be a continuous concern especially when you talk to Americans, oh, what if this government changes? What will happen? Will the GIFT City be scrapped? I think these are all old conversations now. Internationally, clients, investors are fully convinced that GIFT City is here to stay. GIFT City is not going anywhere because the way volume has been created in GIFT, and not just funds, right? Whether it is banks, broking companies, fund houses, aircraft leasing, ship leasing, universities now coming up. The whole play is just increasing beyond imagination. Fintech, TechFin, I mean, I can just keep on naming. And, I just bumped into two of my partners from India, from Bombay, sorry. GIFT looks like foreign jurisdictions. And I was surprised, I didn't know they are here. So one came to meet a ship leasing client, another came to meet a TechFin client. So that all shows the kind of vibrancy which we have in GIFT today. And beyond the numbers, beyond the 200 plus funds, GIFT now offers a lot of advantages. Of course, I don't have the luxury to kind of take you through everything, but to kind of make it crisp, GIFT provides, it's not a tax jurisdiction. Somebody mentioned in the morning, is it a tax haven? No, it's not a tax haven. When you go internationally, when you try and raise money from Ireland and other countries, actually those are more like tax havens, because in the regulations in many of these countries, you don't probably require a substance. You can hire a fund admin person there. Irish fund can have a manager in UK. So that I would call as a tax haven. Whereas when you are in GIFT, the regulations have been so well foolproof way and so well drafted without creating inconvenience to managers. At the same time, substance had been properly built into GIFT. As we know, you require a compliance officer, principal officer. The role of the compliance officer has been well documented in the GIFT regulations. So what we tell our clients is, when you will be audited by the tax authorities, by CBDT, you will not have to worry, unlike a foreign jurisdiction, because substance is enshrined in the IFSC regulations. And as long as you follow that substance and spirit, and you're not just ticking the box, you don't have to worry from a tax point of view. Unlike when you're abroad, and now you would have seen in the papers more and more, questioning from tax authorities around Mauritius structures, Ireland structures, because people just have somebody in the US signing documents for their bank account being operated by somebody in UK, etc. So a lot of questioning, and tax authorities are very well aware of all of this, and now they have even more teeth. India has GAR, as we know, anti-evidence rules, but many of these countries now have what is called as the principal purpose test, which means even if your main purpose or one of the main purposes is to take treaty benefits, tax authorities can deny you under the PPT, even though you might say, I have a substance in Ireland, Singapore, Mauritius also has PPT. So that is to me quite draconian, and plus given the fact that the regulations there allow you some kind of a tax haven. GIFT, on the other hand, you have substance under the law, as I said, plus in the income tax law, many of you would know, there's a provision which says that once you are a FPI and you follow the Indian domestic law, then GAR does not apply to you. And for a GIFT AIF, when he wants to invest in India, he has to obtain a FPI license, and therefore GAR, PPT, etc., nothing applies to such a fund. So I think that gives a lot of comfort, peace of mind, because ultimately, when tax is recorded 5 years later, the investors would have gone. So who pays the taxes? The fund manager obviously wouldn't want to pay it from his pocket. So GIFT therefore provides a lot of clarity on taxation. Regulations also, I think GIFT provides a lot of advantages. For example, no leverage restriction as compared to domestic, no concentration norms, and various other benefits which the FME regulations provide as compared to the AIF regulations. I will not go through all the structures, but just mention two maybe key structures which we are seeing benefiting. One is the CAT3 AIF in GIFT, which invests domestic, so foreign money coming through a CAT3 AIF investing domestic. Now here, if you do non-equity, whether it is debt, FNO, REITs and WITs, ARCs, whatever, or mutual funds, entire capital gains is exempt from tax for the fund, for the investors, and assuming there is no home country tax or whatever, then through and through there is no tax over there. So that's one structure. Of course, you cannot commingle money. So if you have Indian money going abroad, then you need to have a separate fund because GIFT does not allow round tripping. So Indian money going abroad through a separate fund, and offshore money coming to India through CAT3, AIF stroke FPI, this is the benefit it gets. Along with, as we all know, the benefit for the fund manager, 10-year income tax holiday. Singapore does not give you a 10-year income tax holiday for, or whatever holiday for the fund manager. You get some incentives, but you end up paying your 8 to 10% tax. GIFT gives you a 10-year holiday plus no GST, no stamp duty. So both from a regulatory and tax perspective, I think kudos to everyone. I think Sandeep Bhai, I know since, and as Pradeep Bhai rightly said, he is the face of IFSC, so we know him for so many years. The way regulations have evolved, I think most of the things which we wanted, the regular framework now provides. Of course, I do agree that some more things can be done. We can talk about it. But the regulations today are kind of consider a lot of the investor requirements.
I'm sure Rajesh Bhai at some point of time would like to use the opportunity of Pradeep ji's presence here to make a wish list so that more and more items can be covered. But before that, Manav, I think coming from he has worked in Singapore and many other global jurisdictions. You have been talking, interacting with global investors day in day out. Probably it's very important to get your perspective because many a times young fund manager when they are setting up a structure here, they are quite successful in India, but many a time the question is how do we approach global investors? Question number one, and then once if they are able to connect in terms of how do we convince them, because it's not only about selling their own product, it is also about convincing them about the jurisdiction and about the certainty and so many other things. You are also setting up a fund now in GIFT City, and you will be, so probably the plug and play. Maybe before you start, if you can give a bit background about plug and play, and that will be eye opener also for many in terms of kind of investments that you have made in the startups, and then global investors' perspective basically, so that the fund managers or the distributors can also take experience of what you have gone through.
Yeah, so thank you so much. I think out of the 4 entities, Plug and Play is the only one which people would not know about. So we are a Silicon Valley, US-based company. As per PitchBook, the second most active venture capital in the world. Today we have more than 2,000 portfolio companies. Some of them you might know. So we were the first investor in PayPal, first investor in Dropbox. Today we have 40 unicorns in our portfolio. And how we have, captured the early stage investment market across more than 30 countries. When I joined Plug and Play around 3.5 years ago, one thing always bothered me. Why are we not in India? Out of the 2,000 odd investments, we have 3 companies we have invested in India. But all of them have a holding company outside. So, asking why or how do you approach global investors? Maybe another question to ask on the flip side is, how do you convince the global investors to look into India? So that maybe 5-10 years ago versus now, it's definitely changing. So when I asked my boss when I joined, why don't we have an India office? Why don't we invest in India? We have such amazing startups, unicorns. They said, oh, we want to invest in India, but I don't know how to take the money out. And setting up the entity, everything, it's so difficult. It's because the benchmarks they have is areas like Singapore, where you can open up an entity and the bank account in a day. And everything is almost automated so that it can be easily done. So with that as the benchmark, it's very difficult for them to understand so many different licenses, so many different jurisdictions. But that's changing. And I think kudos to the kind of startups that are coming out of India who are forcing them to see this. And even the startups who, like Pine Labs, PhonePe, they set up outside India, they see the value in coming back. And that's also a very big nightmare, right, legal-wise. So they are actually coming back as well. And with GIFT City as the conduit, I think this is going to change a lot, because this gives them the right way to invest in India and take the money out easily and cleanly. So that is making them rethink. That is why, when the opportunity arose to come set up in India along with GIFT City, we were very excited. We were very keen to do that. And over the next 5 years, our plan is to support a minimum of 250 BFSI and related startups. And we are setting up our own investment vehicle from which we can deploy capital to invest in these startups as well. And being a company that's global, the idea has always been for this to be an international or a cross-border play. That's why even in the name, it's so we are in India branded as GIFT IFSC, International FinTech Innovation Hub, in partnership with GIFT City. And when someone asked me one day, so why did we have to bring someone from outside India to do this? We could have done it locally, right? And I said, it's in the name. It has to be international, because you are not doing this for India. You're doing it from India for the world. And that is what we are trying to achieve. And as we take these startups, we have this initiative globally called GOAL, Global and Overseas Acceleration and Learning, where you provide a soft landing pad to the startup so that they can grow in other jurisdictions. That's not easy. You can't just take a flight and go and say, hey, investor, I want to work with you. So understanding different cultures, understanding how to set up, how to hire people in those countries, how to pass their regulations. If you think they are scared of Indian regulations, it's the same the other way around as well. The kind of different tax forms my American colleagues fill, I have no idea. And I'm sure they feel the same way about India as well. So this landing pad and helping them open doors to corporates, to investors, that's very much needed. And I think with time, with more transparency, with structures like GIFT, we are truly now becoming global, where these lines are being blurred.
That's very important, because I think the public market or PMS, while everybody is quite familiar, but when it comes to startup investing, it has generally remained a play of a ultra HNI community, right? In spite of a low ticket size. And maybe this category 1 fund basically that we call, and many of them are also set up in GIFT City. I think, with the right kind of structures and the right kind of exit strategy, even I feel the HNI as well as the retail investors can also look at in terms of investing into, such funds. And there has been a track record of how these funds have kind of performed over a period of time. So I'm sure eventually when market matures, more and more investments will come through, and the PMS Bazaar may have to kind of come up with another platform basically which is focused on startup investing going forward. And we were reading a news, Pradeep ji, one of the first such listing is also coming up now in GIFT City. That is going to again open up a new market where the Indian unlisted companies which were earlier not able to raise equity from the global investors will now be able to kind of do it through the GIFT City ecosystem, and the first of such listing is coming up soon. But now, Pradeep ji, coming back to you again, as I mentioned, this group is also a distributor and somewhere connected to the fund management ecosystem. We understood the fund management entity regulations which allow setting up different structures and the fund. And by the way, the good part is fund management entity, once it is licensed, as one of the category, you can actually do different schemes, right? Whether it's a long only fund or a private equity fund, with the license, you are allowed to do it. Now, question one is, while the funds are coming up, do we have ecosystem where even a distributor can register, or do we have a mechanism where the other service providers can register, and whether they can also get license from the IFSC authority? Uh, and basically, I think if the answer is yes, then I probably would like to understand how that ecosystem is growing, because what's important for a fund manager is also to raise money efficiently, and we feel that distributors will play a very important role in connecting with the investors. So if you can highlight a broad framework around it.
Thanks, Sandeep. So, along with the fund management regulations, last year we brought in another set of regulations called the Capital Market Intermediaries Regulations. Now, under the Capital Market Intermediaries Regulations, what we brought was we brought in a pretty light touch regime for registration of various capital market intermediaries. So, right from investment bankers to brokers to distributors to investment advisors. So we also recognize the fact that probably having specific requirements for each is needed as a fit for purpose requirement. And we also realize that probably there is also a need that certain certain intermediaries should be sort of grouped together for the purpose of compliances. So that is what we have tried to do in this particular regime. So this has led to distributors, while I should say that exclusive distributor registrations are growing. They are not growing. I mean, they have not exploded, but we believe it will explode. But recently we brought in another reform because sometimes the job of distribution cannot be sort of delineated from some other licenses. So recent reform which we brought, for which there has been a lot of traction, has been the global access model, which allows Indian individuals, Indian residents, to invest through the LRS, so they can invest through brokers here, right? So in a way, when you're going to invest through the broker, in a way they're sort of distributing those international products here. So that is something which we have brought, and that has gained a lot of traction. We expect a lot of Indian individuals, Indian residents, to diversify the portfolio through this global access model. So when it comes to distributors, one is, of course, we have the requirement of having one PO and one CO, and the CMI regulation PO CO requirement is quite different from the fund management requirement, where it's a little more muted, so that we understand that fund management regulation actually sort of looks after something that is quite niche and quite different, right? So there are banks who have actually taken it. There are a lot of other companies who have also taken the license. But we are sort of looking at even the model of global access, whereby people could access through the India NXGA model, or the newly, the thing which is going to come up called the NSE IXGA model, through which sometimes even larger funds like the all funds and other things can also be accessed through them. So that is something which we have sort of enabled through the new global access regulations. So I believe through that, in a way, the thing of distribution could sort of get covered. So maybe if people are here, they could sort of explore those regulations also, and probably if possible, you can even speak to the NSEIX and India NX people there.
Just to continue this discussion, I think platform play is now creating a buzz. So maybe you can also highlight.
So then let me also do one thing. It was more of a answer which was like to the point. So it is more of an exam answer. Okay. So what I was thinking was, so the fund management regulations came in 2025. So in my earlier reply, I was just trying to highlight the dynamic nature of the fund management ecosystem here. Within a few weeks, in fact, of our bringing the new fund management regulations, we have been in receipt of so many questions from people, so many ideas from people as to why we can't do something more, right? Which is what I was telling you as to how dynamic it is, and how the regulator needs to always keep its ear to the ground. So the one thing which has to be remembered is, I always believe, and it is a fact, that the regulator is part of the ecosystem. You can't have a regulator who sits in an ivory tower, who is completely disconnected with what is happening outside, because without the people who make use of the regulations, the regulator doesn't exist. So what we did was, we listened to them, and then they said that there is a need for us to bring some more innovative products. So two things were brought immediately. One was the platform play, where people said that probably if you can allow us to manage third-party funds without the requirement of having a complete rigmarole of establishing the whole thing again. So, and we found that that is already in existence in 2 or 3 international jurisdictions in a very big way. So we sort of studied them, and then we were also helped by a few distributors who also made us known as to this could be something which could be looked at. So we did that, and then after consultation that came out. The second one which we did was the co-investment scheme, and we are very happy to say that, and we said that we enabled it through the SPV mechanism. We're happy to say that even the India's domestic regulator SEBI also liked the idea, and they have adopted it for the domestic ecosystem. The third one, which I think a lot of people have been asking, and we have been working with the ministry, is the VCC structure, which I'm sure is music to the ears of a lot of people here. But the VCC structure, we are working with the ministry on coming out with a regulation. Now, interestingly, unlike other things which could perhaps even be adapted for domestic ecosystem, the VCC structure is a GIFT exclusive. It will be available only for the IFSC ecosystem. So that is also something which is in the pipeline. So we have also heard after quite a long time when we have been meeting. So we have organized these meetings called the Chintan Shivir, where the brainstorming programs where a lot of people from the industry have been very kind enough to give ideas. So I found that after one of these recent Chintan Shivirs, there are again some 13 things which I have sort of tabulated, which I have to make changes to the fund management regulations, and we are quite happy to do it. So that should also, sort of result. We should be coming out with the consultation papers shortly on those events also.
Thank you. I think it's a very interesting, mechanism which has been enabled. Many of, the players are still not aware. I think if your investors are very keen to invest and manage fund in India, but they don't want to take a pain of registering a legal entity, I think this platform play is the right approach, where they can still do a third-party fund management, and do that setup. So you may like to deep dive more into the regulations, and we are seeing a huge interest towards that particular segment. Rajesh bhai, I think back to you. Probably you mentioned about tax, and I think it again opens up where fund manager entity enjoys 10 years tax holiday, no GST, and Cat 1, Cat 2 investors enjoy pass-through structure. We have been also trying for 9A, and I think you have been one of the, kind of a brand ambassador for 9A, I would say, where we are trying to create that global fund management ecosystem as well. Probably regulator also enabled issuance of ODI, basically offshore derivative instruments. So I think post these plain vanilla structures of long only or a hedge funds or a private equity funds, I think new structures are also emerging from GIFT City. I think the next play which I feel, Rajesh bhai, is the global fund managers. I think we've got Morgan Stanley and a couple of other global fund managers. But how do you see, the global fund managers now considering to set up a structure? And if one or two things that we should do it to make them, look at the GIFT City as a jurisdiction, what can be those two, three things? Yeah.
So you mean to say for global investing?
Global fund managers.
For investing in multiple countries?
Yeah.
Okay, but before that, just 1 or 2 points on, one is on the platform. I think the final regulations allow for commitment up to $50 million, which is quite significant. And it allows for a lot of players to use the platform structure, because the cost will be spread out by the FME across different clients. So your cost will be lower, because compliance officer can be spread out, your office space, etc. You only need a principal officer for each client or each advisor. So I think which will be good. 2 other structures, as you all are talking to your clients, to watch out for. One is outbound, and with India being a little stable, last 1 year we have seen with some fund manager clients good interest in investing in US, in Europe and China, maybe 1-2 years back. The outbound structure now allows for, and there's full clarity from the regulators, allows for $250,000 per individual. So if you're a family of 4, you can invest 1 million through a GIFT City fund and invest abroad. And more than that, more interesting is the OPI route, where if you are a family office or any company in India, even if that company is not in the FS sector, you can invest up to 50% of your net worth in a GIFT City fund, which you can't do in mainland India. And from there, investments can be made offshore. So I think that is something which we have seen pick up, and in the next 1 or 2 years, we'll see more pickup. The other is retail funds. The regulations were there for about 2-3 years, but in the recent past, we have seen at least 4 or 5 registrations on the retail side, like a mutual fund attracting offshore money to invest in India with a small de minimis, $500. Some people have a higher threshold because of cost considerations of 5,000. But we'll see more and more players into the retail fund route under FME regulations to act like a mutual fund and invest directly in Indian stocks or invest in domestic mutual funds. And both would have their own tax advantages. Now coming to global fund managers, I think that's a little tricky question, because when you look at global investors and global managers, let's say like a Morgan Stanley or a Schroders or a William Blair looking to invest in multiple countries, even though there are jurisdictions which provide more benefits compared to a Luxembourg or a Cayman, and GIFT is one wonderful example and few others, the investors are still comfortable with either a Luxembourg for investing in many countries. US investors are still comfortable with the Cayman Island if you're a tax exempt investor, or if you're a taxable US investor, then a Delaware feeder. I think it's a mindset issue for one. It is very difficult for these investors to be convinced to look at jurisdictions outside Delaware and Luxembourg, because they feel they have the comfort. These structures have been there for several years. So I think one is, it will take some amount of marketing by fund managers to showcase why GIFT is on par and in certain respects better. And I have a live case. 2 days back, I was speaking to a client who's an Indian manager who's setting up a fund in GIFT to attract foreign money from foreign investors. So nothing to do with India. Money will come from NRIs, OCIs, and will be invested in the US. But we want, as Sandeep said, we want to see more of that. Why not global institutions, pension funds, etc. look at GIFT as a jurisdiction from which they can invest not only in India, but in multiple countries. I honestly don't see a lot of reason why this is not being done, other than the fact that they understand Cayman, Delaware better. Maybe one thing is they also feel that arbitration is probably easier in those jurisdictions if there's a dispute, etc. But other than that, I think it's more of being familiar and trying to market GIFT.
No, thank you very much. And probably I think another trend we are seeing today in GIFT City is also for the retail mutual funds. I think 2 days back we saw Edelweiss AMC opening up their office here, and Parag Parikh setting up their fund here. How do you see that retail space coming up from GIFT City? Are you seeing attraction from the asset management companies to now set up retail mutual funds?
Yeah, absolutely. I think HDFC was the first one, and there are talks with others, including the names you mentioned, and 1 or 2 other Indian groups wanting to set up retail fund and GIFT. And the benefits are multiple. One is that if you invest in non-equity, they get full tax exemption. The fund manager gets a tax holiday, etc. That is one. Even if you invest in equity, you can still get a lower tax on dividend, 10% compared to 20%. So that itself offers a tax arbitrage. And the ticket size being small, the initial interest is from NRIs and OCIs, as we have seen, and to some extent foreign citizens or individuals. But I think once this becomes popular, the AUM or the corpus of a retail fund increases, we'll also see insti money coming into India through the retail fund route.
Great. Because many times as a distributor, you are also connected with retail NRI investors, and they may not be comfortable investing $150,000 at one go. I think for them, we feel that retail mutual funds would play a very important role, where as low as even a $5,000 or $10,000 of investments can happen through some of the schemes which are coming up. And I think it would be not wrong to say that dollar SIPs would start soon with these retail mutual funds, where they will invest into the schemes here, which will ultimately be invested back in India.
And sorry, just to add, some managers are also offering hedging products,
Okay.
because ultimately when they invest in India, USD INR conversion. So the investor is protected from the FX risk. And as we all know, no PAN, no tax ID, no return. So that is also a benefit.
No, that's important. So because your investors will not have to take PAN in India, they will not have to file income tax return in India when they are investing through the structures in GIFT City. Manav, I think you've seen a journey of a startup fundraising Series ABC, listing on the markets. You've given exits to many of the investors as well. Probably, I think that's the ecosystem we would also like to capture in GIFT City, because if you look at the overall ecosystem, we allow venture funds to come in, angel funds to come in, fintech startups have been permitted. There is a listing regulations where such companies can also list. Do you think from your portfolio companies where the companies are now maturing and looking for an exit, and do you see GIFT City can be a platform where listing of some of these companies can happen?
So last year when we started talking about setting this up, I would have said maybe not. But now things are finally, all the pieces are coming together. I think the last one was the listing regulations. So when we started this, the first batch of 10 startups we were supporting, they were all startups who wanted to see if they wanted to have additional, setup in GIFT City. But now our second batch, the startups which are in our office right now, 11 of them, most of them natively will be registered fresh just in GIFT City. And then one of the startups in the last batch, which is, I call them the poster child of GIFT fintechs, is 𝐺𝐿. They have also moved completely to GIFT, and now they're looking at creating the first neobank based out of a zone like GIFT City. So, and then since we set up, there have been so much interest. How do we set up in GIFT City? How do we do it? Can you connect us to the GIFT City team? Can you connect us? Can you have IFSC? Can we speak to them? And one thing is, because IFSC is very approachable. When we were just putting the building blocks together, Joseph, I was meeting with him, who's the CTO of IFSC. He said that we are literally just in your backyard. Once the buildings are ready, it will be next to each other. But right now, wherever you need our help, and they have been so supportive. They have always been helping give insights, which I think is very much needed. Because if you are trying to set up in a new jurisdiction and the regulator says that, yes, I am going to put proper limitations, constraints, legal aspects to it, but I'm here to listen to you. I have my ear to the ground. So that always helps give that kind of comfort. And I think with this, the startups will have a really, really good advantage when they are trying to go against other startups across the world. Because earlier, if you are, let's say, a Singapore-based startup, going into different cities, countries was very easy. And when Indian startups are looking to go abroad, the first question is, oh, do you have that kind of money? Do you have the right people in place? But when you're setting in GIFT, you're already thought of that before you start there. So that way, they are much more robust in their thinking and the way they do this. And coming to the answer to your question, yes, definitely the startups are now engaging primarily to say that I want to be homegrown right from GIFT City.
Perfect. And I don't know if as a distributor you also help investors to invest into the startup ecosystem, but if not, I think that can also be one of the opportunity which you can look at and connect with the ecosystem players like Plug and Play, where you can help bringing the investors who are looking to invest into the startup ecosystem, right?
Yeah, so I think one thing is there are a lot. I think everyone here would know at least someone who has created a startup or works with a startup. So thanks to the Razorpay, Spine Labs, Zerodhas of India, everyone knows and is excited about startups. But at the same time, a lot of people have burned their hands also, because someone came and said, hey, I'm starting a startup, you want to invest? You invest thinking that they will become the next Zerodha in 2 years, but it's a 6, 7, 10, 15-year cycle. And the odds of a startup, let's say if I start a startup today, me becoming a unicorn is 1 in 10,000. So these things, as they get clearer, that this is a very illiquid asset class, but at the same time, diversification is needed. No one is saying that if you have money, invest in the public market or invest in a startup. It's invest X percentage there and Y percentage here, so you are diversifying it properly. So as people start to understand and be a bit more mature about this, I think everyone will want to know how they can invest in startups.
Great. Maybe I think we are just about to get our closing time, but maybe a last question to each panel member, and then we'll come to the audience as well. We have time for the questions from the audience as well. We have time, right? So 5-10 minutes. Okay. So maybe before last question to each one of you, and maybe Pradeep ji is here. While we have seen a lot of changes, developments have already come in. If you would like to, in a very one line, if you want to say a vision for of IFSC for the fund business, what it could be, and then for Rajesh and Manav, I think maybe because it's a good opportunity to give a wish list as well. So if one wish list, if you want to give, to this regulatory ecosystem here, what it could be. So. Yeah.
So if you want me to tell you in one line, then I'll say that the only way is up. So I think things are looking up, and as a regulator, we are quite excited about what has happened so far, particularly in the last 2 years, because things have actually jumped, doubled or quadrupled the numbers which they always say it's very difficult to make your first million. So I believe we have already made that. So now it's just a question of just ensuring how incremental things can be. But as a regulator, like I was trying earlier, we will continue to be. We will continue to listen to the market, and we are always approachable, and we are supposed to be approachable. That is what a regulator is. So in case you have ideas, in case people have ideas, we are ready to implement it, as long as we are able to sort of give a regulatory flow to it. But I think the future will be of innovation. I think just heard Manav saying, but so that innovation is something for which we should be attuned. So, and I believe as a regulator, we will be able to do that.
And this 200 number will become 500 in couple of years. Can we say that?
Yeah, that's what I was saying. So what has doubled, we hope to see that it will be quadrupled. So numbers, of course, statistics are indeed reflective of progress. So presently, for example, you look, there are the alternative fund investment space, just probably 12-15 months ago, we had around 1,000 investors. So we had 3,500 investors now.
Wow.
So which is almost, it's tripled, right? So similarly, I think even the number of funds, for example, when I took over, it was 86. Now we have reached 290
wow.
as we speak. So I believe numbers are there only to be beaten. But I think what is important is, in a larger picture, is whether we have been able to sort of achieve why we have been set up for, right? That is for these three things which I told you, to onshore, the offshore, and to be a hub for global capital flows, and to be a hub for innovation.
Yeah. Thank you.
If you give an opportunity to a consultant to ask the regulator, then one is not enough. But very quickly, one is the use of greater digitization. I mean, India is proud of being one of the most advanced countries. So whether it is on onboarding, KYC, a lot of paper trail can be eliminated. Tracking of investments, standardization of the PPM, and now the retail is coming up, so both for non-retail and retail. So greater digitization, I think, can help smoothen up the onboarding and ongoing compliance process. Second, maybe if I can push a little further, smaller funds who don't want to go through a platform structure, they want to have their own FME. They probably, maybe you could consider allowing an exemption from having a compliance officer for a particular ticket size, platform structure, for example, up to 50 million. So maybe a similar lower limit that can help them to manage their cost in the initial period. And lastly, yes, VCC, we are all waiting, because if you have multiple products, multiple schemes, unfortunately today you have to set up multiple AIFs. So once the VCC regulation is implemented, I think it will give a further boost.
Thank you.
I think with the way IFSC is going, we'll have more money than startups here, which is not an ideal situation. So I think the opportunity is for startups who are looking to either get exposure or to natively set up in GIFT City because of the the money available, the kind of the way it's much more simplified, and the new opportunities that are coming up, which might not even exist in the domestic market.
Thanks, Mano. Maybe a couple of questions from audience and then we'll close. I think.
So I'll just add one
Yeah.
point. Like when you're looking at, you're talking about what will be a good future look for you as a regulator. So if I just may answer. See, today the IFSC is existing and is propped up by a very strong domestic market.
Correct.
So I would want a day when investment should be into IFSC, right? We have got a bond ecosystem. So tomorrow we want an equity ecosystem, so that derivatives and probably various additives of the products that are available in the IFSC, so people can invest into the IFSC for IFSC itself. So that will be a true test of success. So hopefully we should reach there sometime.
Absolutely. I think we have seen that success in the Nifty as a derivative contract, which is clocking a very significant volume today, and more than $90 billion of bonds have already been listed. So you are absolutely correct, right, in terms of if we can add more and more products and money can flow within the system, I think that would be a great success again. Maybe, you had a question. Yeah, please.
Good evening, sir. My question is addressed to you, sir, Mr. Pradeep Ramakrishnan. Sir, I run a wealth management firm in Delhi, and we've recently been given a LOA to set up our distribution firm here in GIFT City. As we await our in principle approval from IFSC, I have one query with regard to the CMI regulations which you just mentioned, wherein a distributor, while providing global access models to its clients to invest through brokers, what would be the constitution of registration? Would we be working as a referral partner, or would we have to take up a broker-dealer license?
So we have brought in a concept of an introducing broker.
Okay.
So maybe you can have a look at it. So maybe you could fit to that particular license. So introducing broker is something which you can look at.
That would come under distributors.
So that will be a separate license, but
Okay.
that is a lot more light touch. So you can look at that. Introducing broker will actually fit to what you are trying to do.
Yeah. Thank you.
I think there is a question. Yeah.
Hi, I had a question regarding the direct onboarding for the US-based investors. So it seems that there are certain compliances additionally required. So wanted to discuss on that regarding FATCA, IRS or SEC. We had certain clients and there were certain challenges that we were told that it won't be possible for us to onboard the US into the Cat 3 AIF. So can anyone help us out in terms of the challenges and also the precedents in terms of what can be done?
Maybe I'll
Rajesh
start
bhai.
if you want to add.
Yeah.
So, of course, India does not allow passporting. So, you have to be careful in terms of how you onboard US investors. If an investor comes to you and saying that I want to invest in your fund, which means you're not doing any marketing in the US, etc. So that is okay. But even there's a limit. I think it's 20 investors and a particular quantum size on the AUM. If you cross that, then you have to register yourself with the SEC. But that's more of a light touch regulation to ensure that SEC can have a regulation or monitoring over you. It's not a very elaborate, because you don't have a broker-dealer license or you're not passporting in the US. So that is one. FATCA CRS is across the whole world, including mainland India and GIFT, so that it's more of a compliance and filing. And lastly, from a US investor status, if you are a GIFT City fund and if you set up yourself as a trust, then generally US treats the GIFT City fund as a partnership, which means the fund will give a K1, a form called as K1 to the investor, based on which the investor can claim credit for any taxes paid by the GIFT City fund. So there's no double tax for him over there. And plus the advantage is, unlike maybe Cayman, that he doesn't pay tax on unrealized gain because it's a partnership in India. So he only pays tax when the GIFT City has sold some securities.
So which reverse solicitation is something which is possible,
Correct,
right?
correct.
Thank you so much.
There is a question there. Yeah.
Hi, good evening. I'm from 𝐻𝐾 Capital, Singapore. I wanted to inquire regarding the outward remittance from INR to dollars on the unlisted company space. So, is it possible for Indian families to set up LLPs in private limited companies and transfer 50% of the net worth of that LLP/private limited company to a GIFT City structure without RBI's permission and for OPI?
I don't know whether I have quite comprehended your question, but if it is on an FIF, if you're asking on an FIF,
No. So if I were on Indian shores and I have 100 crores, can I transfer that 100 crores to an LLP and transfer that money from
An
rupees to
LLP in?
dollars? LLP registered in India,
okay.
and transfer that money to a GIFT City fund for onward remittance in dollars outside under OPI. 50% of that.
No. So it's like this. See what the fundamental principle of law is: what cannot be done directly cannot be done indirectly.
Okay.
Right. So presently, while the regulations don't say that you cannot do it, so we have been advised presently to not look at FIF outbound. Right. So inbound is permitted, but FIF outbound, whether directly or indirectly, as of now, we have been asked to hold on.
All right. Thank you very much.
Okay, I think it's already over, shooted. So maybe some of the other questions can be taken, off the dais. But I would like to thank all the panelists for a very frank discussion and sharing their experience, basically for the GIFT City ecosystem. And thanks to PMS Bazaar as well, I think, for bringing together such a, healthy and wealthy crowd basically here, where I think it's a last session and I can see many of them are still sitting in the room, which shows the kind of interest that they have for the jurisdiction, and look forward to having more such interactions going forward. Thank you very much.